Good afternoon and welcome back to Moneycontrol live stream. You're watching the closing bell and I'm Santosh Nair. Well, bears have stepped up their ante as the stock indices seem to be all set to close lower for the second day running. Now, Nifty and Sensex are both under pressure. They got off to a fairly steady start, but since then have been steadily losing ground. And at this point in time, the Nifty is down by over 150 points. In fact, earlier during the day, the Nifty had fallen below a crucial support level of 18,200. Now, 18,200 is a mark which is closely eyed by technical analysts, and they see it as a very crucial support level. What happens is typically when indices fall below a certain support level, then it seems to somehow trigger more selling pressure. We've seen a pullback below the 18,200 mark. Since then, indices have regained, the Nifty has regained some ground, but we still have close to about 20 minutes of trade still to go for the day. Global cues on the whole are firm at this point in time. Europe is trading higher and US stock futures too are up. However, back in India, there seems to be some concerns about the renewed surge in COVID cases globally. That is also one of the factors that appear to be weighing on sentiment at this point. Besides that, we've seen a lot of unwinding of long position, particularly in mid-cap stocks. These stocks have fallen more than the frontliners today. The NSE mid-cap index is down by close to about 1%, whereas the Nifty and Sensex at this point are down by close to about 7% each. The India Volatility Index, or VIX, has also seen a big spike today. It's up by close to about 10% at this point in time to a little over 15. Earlier in the day, the VIX had surged by as much as 15%. Now, what does a surge in VIX indicate? It mainly means that traders are buying a lot of put options. Typically, traders tend to buy put options when they are bearish on the market, and then they see prices going down. So, a lot of put options have been bought, as a result of which the VIX has surged. It was up by about 15% earlier in the day. It's now fallen some bit from the day's high. It's still about 10% higher than the previous close at this point in time. Among the big gainers, big losers today, we have Indiabulls Housing, City Union Bank, Indian Hotels down by about 5% each. Now, City Union Bank, the RBI has flagged the divergence in gross additional non-performing loans by about 259 crores. Investec had retained its bullish call on the stock. However, overall sentiment seems to be quite negative for City Union Bank. The stock is down by a little over 5%. Yesterday as well, it had fallen 2%. Now, remember, banking stocks had seen a good run up in the last couple of months. This was seen across both private sector and public sector banks. So, given this backdrop, some bit of profit taking is being seen, and especially wherever there are concerns, I think investors appear to be in a hurry to take out some money off the table. The star performers of the day so far have been pharma and IT shares, both seen to be defensive in nature. Defensive basically means that these stocks fall less in a falling market, even though they may rise less when the overall market is rising. IT and pharma both have been underperformers. So, to that extent, probably the market thinks that valuations do offer some comfort because the stocks have not run up sharply. The general trend at this point is that investors are pulling out money from stocks which have run up quite a bit, where they have made money, and putting them into stocks which they feel probably, if nothing else, won't fall much. IT has had a pretty rough run so far this year, and the selling pressure was seen till Monday after Accenture's quarterly numbers again triggered a fresh wave of cautious reports by brokerages. But since then, yesterday and today, the stocks seem to be seeing some kind of a pullback. Partly that could also be due to short covering of positions. Among the big gainers at this point in time, Cipla, Sun Pharma and Divi's Lab, the stocks are up by more than 4%. And now let's take a quick look at some of the stocks that caught our attention this afternoon, starting with Dr. Lal Path Lab and Metropolis Healthcare. Now, these are diagnostic stocks, and these stocks again had taken quite a bit of beating earlier on in the session, earlier on this year. The big concern at that point was that players with deep pockets from the pharma sector were entering the field, and which meant that that would be some kind of a pricing war, which clearly was seen in some of the low end tests. At the same time, both Dr. Lal Path Lab as well as Metropolis Healthcare had benefited immensely from the COVID wave in the last couple of years. Testing had gone up, as a result of which the earnings were pretty good. But with that stream of earnings drying up and the fact that a lot of new players were entering the field, these stocks saw a sharp fall. In fact, Metropolis Healthcare is down by close to about 50% from its highs seen earlier this year, and so is Dr. Lal Path Lab, which is down by a little over 35%. But once again, given the renewed rise in COVID cases globally, we are seeing some kind of renewed buying interest in both these stocks. Now, again, remember, we are not seeing a surge in COVID cases in India at this point in time, but typically markets always tend to anticipate the future, and this is what they seem to be doing at this point in time. Voltas is the next stock on our watch list. Voltas is down, has hit a 52-week low today. It fell to as low as about 813 rupees. Now, the company's operating performance has not been all that great. For the first half of this year, it lost market share during the March quarter and also during the June quarter. It did regain some of the market share. However, that the regaining of market share has come at the expense of profit margins, and this is what the market appears to be concerned about. At this point, we are seeing build-up of short positions in Voltas futures. Samvardhana Motherson is the third stock on our watch list. Now, Motilal Oswal is positive on the stock, and according to the brokerage, the worst may be behind for Samvardhana Motherson, and operating performance is set to improve from here on. Now, the key drivers for what could lead to the improvement in operating performance, one is that the supply side issues which had been weighing down the company, that has been sorted to a large extent, and besides that, operating costs too, which had been steadily on an increase over the last few quarters, that also are expected to stabilize. And lastly, Motilal Oswal feels that a large part of Samvardhana's investments are already done, which means that better improvement in operating performance, that should clearly improve the cash flows of the company. Motilal Oswal has a buy rating on the stock with a target price of 95 rupees. Last on our watch list this afternoon is Bank of Baroda. The stock is among the big losers at this point in time, down by close to about 2%. Now, again, Bank of Baroda also, like most other PSU stocks, saw good run up in stock price over the last few months, but now there has been some kind of profit booking for the last couple of weeks. But at the same time, overall, most analysts feel that the stock still remains among one of the preferred bet in the PSU banking space. That's because valuation wise, the stock still offers comfort. At current prices, it's still quoting at just about 1 times book value, that is trailing 12-month book value, which is not very unusual for PSU banking stocks, which typically tend to quote at a discount compared to the valuations commanded by most of the private sector bank. But here, overall, Bank of Baroda has also seen a strong turnaround in its performance in both the first as well as the second quarter. That also led to the re-rating of the stock among analysts. The growth in all the business segments of Bank of Baroda was pretty strong, and this has been consistent. The credit growth also has been pretty good, and all this is led to the stock doubling, almost doubling between June and December of this year. But since then, again, some bit of profit taking, given that the stock has run up quite a bit. And let's take a quick check on the market before we wrap up. As we speak, the Nifty is down by close to about 170 points. It's still holding just above the crucial 18,200 support level at this point, but it remains to be seen if the index will be able to manage to stay above that level. In case it fails to hold that, we could see more selling coming in, especially from traders who follow technical indicators very closely. And with that, it's a wrap on this edition of Closing Bell. Thank you for watching. We'll be back with you again tomorrow at 9 a.m. For all news, views and analysis, stay logged on to moneycontrol.com.